Century Laminates and Century Ply.
Welcome back. So the market continues to hold on to some green. Bank Nifty is also up about 45 odd points right now. So it's quite a reversal, at least from the morning session lows. But it's volatile. You can see the dip on the Nifty once again showing up. So let's see how this plays along. On a slightly different note, Prakash, I wanted to get your take on that entire GMM Faudeler saga, the whole drama that played out. Again, today the stock is higher, though we are hearing that maybe SEBI is going to investigate what was happening in the SLB market. But what did you make of things, and do you buy the promoter's logic that this was to remove an overhang with this private equity group exiting?
So it has been messy, I agree, Survi, and you know, it doesn't leave a good taste when you have so much of explanation that is warranted for something that didn't seem very natural, right? That move itself seemed a bit convoluted, but there has been also cases where, you know, we've kind of overreacted to these situations, and the promoters didn't need to go into this overdrive of explaining every now and then, fund managers wanting to explain their rationale behind that picking. So it's drawn unnecessary attention, and that's one of the reasons why there's been a lot of disappointment, skepticism around it. The core business is what you need to evaluate, and if that continues or offers promise for a long visible period, I think the mojo will come back, but that would take some time. The restoration of confidence would take some time. And you know, I was quite surprised, unlike this particular name, the other name that is there, that's HLE Glasgow, and that also started showing signs of weakness, which was not warranted. So you know, when you have a sector which is very narrowly populated with just a few players, it does tend to kind of disillusion people a lot. But I would give GMM Faudeler some time to consolidate, and then this explanation, whether, you know, they actually live up to the explanation that has been provided, and then the business metrics would take over. So that would be a while away. But at this point, I'm not in a hurry to go and buy just because it's come off 30% or whatever from its peaks.
Yeah, credit where due, it's got support right at the OFS price, so 3,500. It's bounced back, and for 2 days now upper circuit. Prakash, I would request you to stay on. Perhaps you can grab a cup of coffee. We'll come back to you at around 3 p.m. with some more questions. For now, we have our next guest joining us. Emerging market strategist Jonathan Schiessl is joining us. Jonathan, good afternoon. Thanks a lot for joining us. First of all, your thoughts on this whole first presidential debate. You know, who won that, and how should the market read it? Because as we speak, the futures market in the US is still down.
Yeah, I mean, clearly, anybody who did watch it, I guess anybody who's sitting outside the US, the nature of the debate was quite shocking, quite frankly. I know we have seen these sort of things before in the US, but yeah, it's difficult to gauge after just one debate with very sort of fractious debate as well. As you rightly say, US futures are coming off a little bit, but I think we've got a few days to go, a few more sessions to go. So early days, and I guess both teams will be drawing lessons from that. And let's hope we can actually hear a bit of policy coming out of the next couple of debates.
All right. Jonathan, so markets have been confused and they've been really all over the place, right? Let's start first with the equity dollar correlation and how you're viewing this increased volatility on the dollar index and the fact that's now, again, tracking levels of around 94.
Yeah, absolutely. I mean, key clearly for global markets, and particularly emerging markets, is what's going on with the dollar. We had seen some dollar strength, and now obviously it's come off again more, you know, in the last few days. You know, I think broadly speaking, most of the consensus view out there is that for the dollar to weaken going forward, but obviously in pockets of risk-off moments like we've been going through, then it's very plausible to see the dollar gaining a bit of strength. I mean, you know, I guess we've got to expect some volatility coming over the next month as we head into this election. And the dollar probably will be swinging all over the place over that period as well. But probably after the election is out of the way, regardless of who's in power, it seems quite probable that the dollar will carry on weakening for some time.
Okay, we'll, by the way, just flash some lines that Kumar Mangalam Birla, of course, is addressing the idea UGM is making some important points, especially about pricing, that revival is important for health of the sector, and work from home is going to drive increased data consumption, which will provide significant uptake to all telecom companies. That's an important update. We'll change the name of the stock. It's not VLS Finance, it's Vodafone Idea. But, so Jonathan, let's talk about then the Indian market. And, you have, of course, had investments into Indian markets and a lot of large stocks as well. I wanted your thoughts first on the automobile space, because in the past you've invested in Eicher Motors and have made a lot of money. Are you buying this sort of revival story in India, this of the automobile sector?
Look, I guess globally it's a very difficult space. There's clearly a lot of structural change going on with shifts to electric, even hydrogen they're talking about, maybe not at the passenger vehicle level yet, but and India is no different. Obviously with what's gone on with the whole COVID episode and what is still going on, quite frankly, the auto space still does have headwinds. Obviously there will be some pent-up demand. And some companies, there is this sort of premium argument, and I guess I can see why the sort of Eicher Motors story is getting talked about at the moment. But yeah, it's going to be a space which is clearly remains very beholden to consumer demand and consumer sentiment, and obviously, banks, are they willing to carry on lending into this whole area? So, it's a space which I think, like many other sectors in the market today, is still very beholden to the whole COVID question and consumer confidence.
Okay. Speaking of COVID, Jonathan, one pocket of the Indian market which has been bid up quite a lot in the last few months is, of course, IT. I'm talking about technology. And now valuations are actually higher than some of the historical averages that we're used to seeing. Do you think it's justified, and do you think it still warrants fresh money coming in?
Yeah, I think it's a bit like US IT, and the big US tech stocks. It's very similar in India to some extent. If you believe the world is coming out of this whole COVID episode, then you don't want to be owning Indian IT, or quite frankly, you want to be reducing your weights in the US tech sector as well. However, with Europe seeming to going back into some sort of second wave of the disease, worries are resurfacing that this V-shaped recovery that everybody was hoping about perhaps will be delayed. And on that basis, you do want to be owning Indian IT. So it's almost a binary call at a top-down level, whether you want to be in IT. Obviously, from a bottom-up perspective, as you rightly say, the valuations are pretty punchy historically. And it's not as if, you've got tremendous growth opportunities out there. There is good, solid growth for those companies. But obviously, I think, investors clearly have been herding in that space as a sort of a protection against this whole COVID issue. And as I said a moment ago, clearly the choice is, if you believe we'll come out the other side, which I do, then perhaps you need to be reviewing your weightings and maybe broadening it out into some of the more domestically cyclical sectors, which are trading much cheaper.
Okay, in the last fund that you managed, Jonathan, you had a very large exposure to Dr. Reddy's. Now, we've seen a huge move in the stock, in line with the entire pharma pack, in fact. What's your view now? What has led to this kind of re-rating in the pharma space, and do you see that continue?
Again, it's a similar story, isn't it, to IT? The pharma sector, obviously, from an Indian perspective, is an exporting sector, same as IT. And also, obviously, it's a perceived beneficiary of the whole pushback to healthcare and et cetera, et cetera. So again, it's a sector that's done incredibly well. And again, if you think we've got quite a few more months of uncertainty ahead and the disease isn't conquered anytime soon, then those sectors will probably carry on running for some time longer.
Okay. Also, how would you look at going in for the so-called unlock trade in India, Jonathan? I mean, a lot of these stocks have been beaten down, but has the time come to own restaurant stocks or cinema stocks, or is it too uncertain and maybe their business model, their operating cost structure as well, might undergo changes?
Yeah, I think that's a very interesting question. I mean, clearly there is a lot of stress in that part of the market, and that's not just in India, that's everywhere. Obviously, humans are social creatures. We do like to go back out and socialize and eat out, etc. And we will do that in the future, but there's no doubt that things will change. And there's no doubt that, that there will be a lot of stress, there will be bankruptcies and closures ahead of us. So there will be tremendous opportunities there as well. But I think the key there is to find companies that have adapted to the new climate that we find ourselves in, that do have some sort of more online strategy, that can, help them fill their restaurants, can help them keep their kitchens busy, et cetera, et cetera. And, there will be winners out of the other side. Now, do you start buying these names now? Yes, you have valuation support on your side, but I think if you start looking at these names, the key is to give them a fairly large stop loss, before you have to sell them, because with the volatility, these names could come down fairly substantially, and equally they could move up fairly substantially with short-term news flow. So I think it's a good idea to start looking at some names, but I think also they're
okay, I think we just lost that line over there, but we got the gist of what Jonathan was saying, that you need to have deep pockets and deep patience if you want to play the unlocked trade in some of these urban recovery stocks. Well, since we were talking about the global setup, let's also bring you a word from Gary Schlossberg. He's from Wells Fargo. We spoke to him about the U.S. presidential debate and what the presidential race means for equities. Take a look. We'll be in a break and then we come right back.
The president is generally viewed as more pro-business. I think the knee-jerk, ironically, could be very similar to what we saw back in late 2016, early 2017, where the reaction by the market was very strong. And then as the debate bogged down a bit, the realization that things wouldn't change all that quickly, the market began to focus on other issues. And I think that may very well this time around, but certainly a Trump victory, I think the odds would be that the initial knee-jerk reaction would be positive from the market. Overseas, at the moment, we're less unfavorable, slightly more favorable toward emerging markets than we are toward other developed economies. The other developed economies, particularly Europe, still dealing with a rising infection rate, domestic demand there. Still a question mark, benefiting from the growth in China. I think emerging markets might be better placed. Generally speaking, they're doing a better job of containing that infection. And with the dollar weakening, ultimately, we think that's more of a positive for emerging markets as well. I think is to some extent, and I don't follow it that closely, but to some extent has been dealing with that relatively high infection rate. The social distancing has had a disruptive effect there, much as it has in the United States. We think it's going to be a difficult period, not only for the U.S., but the global economy generally out over the next several months.